Hello, active traders, and welcome to our session tonight. This is Ken Calhoun, your host, president of the original online university, daytradinguniversity.com and Trade Mastery, with Unlock Your Trading Success using SwingScans and TradingTheOpen. In tonight's event, we're not going to do a bunch of PowerPoint slides. I'm a trader, so we're going to look at live charts for a lot of the session. But the main goal of tonight's event is to give you some insights in terms of examples of actual live winning calls we made today and this week for both of the services. Two different services. SwingScans.com is for stock and ETF swing traders and options traders too. A lot of options traders use that for directional guidance. And also TradingTheOpen, my live trading room, in which we primarily focus on stocks, but we also cover EMinis and Forex. So we've got a couple of different services to go through and share with you some of the insights in terms of how to use those. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. For those of you who are new to working with me or watching this on video later, you can note that I'm featured in CBS Market Watch, Money Show, TheStreet.com, Stocks and Commodities Magazine. Highly recommend everyone subscribe to that. Active Trader Magazine, no longer with us, Equities.com, and the rest of it. So the good Fortune 500 background and a lot of background experience working with professional traders as well as home retail traders. You may have seen me in this month's issue of Stocks and Commodities with an article on ADX breakouts with my friends over at Stocks and Commodities Magazine. It's always great to see good colleagues, and I work with nice people in the trading industry for our different working relationships. So certainly a big fan of the magazine and the people that work there. So it's great to work with Janthi and everybody else at the Stocks and Commodities event. You may have seen me at the Traders Expo in New York as a featured speaker for some of the premium events as well as the other ones. I'm usually always there in the Las Vegas, and I will be there again live at Caesar's Palace this November as a speaker, and also be speaking at the Money Show May in Las Vegas this year. So certainly recommend that you attend any of the Money Show events that you can. It's a great way to talk. The main thing I like is talking not only with my colleagues, but also with real traders and be able to see people face to face and shake their hands and do an autograph or a selfie picture with them or whatever. So it's kind of fun to meet with a lot of the traders out there. It's really exciting to see the loyalty of everyone. So thanks so much for being here. Let's go ahead and get underway. One of the things that I wanted to start off by giving you a quick overview of is how exactly the SwingScans service works. And the main thing that traders get is access to a members area where you get, not only by popular demand, I now record these. These are webinars that you get every single Saturday where I look at my very best charts. I give away 2 or 3 ones without alerts just to get people up to speed on the kind of charts that are actually worth trading in the week ahead events. But this is where things really come together. And what we do is give you 14, not just 2 or 3, but 10 main stocks, along with a couple of sub $20 instruments like GoPro. I called it long correctly. Boom. This week, XIV, I called it correctly long. These are all posted on last Saturday, the February 27th. And just for an example of just, how much money could you have made? Again, these are all for paper trading only, but XIV, my long call was 20.3. And if you look at that chart, that's where I said the long call. It's already gone up well over a point. So anyone who took that alert is nicely in the money on this nice 45-degree angle breakout in XIV. And what we do is we go through as a team 15-day charts. And so what I do in 30 minutes and 90-day charts, so we do kind of 2 runs through. We go through the 15-day charts of some of the very strongest charts out there and exactly where to trade them and the patterns that make them good trading candidates. And not only on the 15-day, 15-minute chart, but you also get to look over my shoulder as we look at the 90-day candlestick charts. And we look for patterns, whether it's momentum candles or breakouts above. I remember one of my Stocks and Commodities articles taught people correctly how to trade over the 50 and the 100 moving average lines on pivot plays, especially when it's accompanied by high volume and a tall momentum candle. And those make for really good trade setups. We're really very proud of our members for all the progress they've made and all the great feedback that they provide over the years that we've run the services. So, I called Ingersoll Rand long. These are all what they got last Saturday. This was last Saturday's event. and last Saturday's calls, and you can see exactly how well and how profitably these alerts would have worked out. Not all of them hit, but a good number of them did and are currently in the money, so that's good. You probably wouldn't want to trade all 14 anyway, but as they alert, as they hit, what I will do is I often will set up a buy stop order, either in my Fidelity account or my Interactive Brokers account. I'll put a buy stop limit order, so I don't buy a big gap up, but I do get in on a breakout once it breaks on through to the other side here, to quote Jim. And so as we look for good breakout triggers, we also have the support and resistance for the S&P and video downloads of each Saturday's event as well, in case you can't make it, or if you want to sleep in, or you're on vacation, or you're taking a trip, or you just don't feel like logging into the webinar that Saturday. By popular demand, I had hundreds of requests for this, so I thought I'd go ahead and record these for everybody. So they're a good 30 to 45 minutes, depending on how much content we have to cover. Usually 30 minutes or so, and then I'll stick around and answer questions for both the current week and the previous week. So that way you've got a library of high resolution, these are 1920 by 1080 pixel Blu-ray quality resolution videos that you get to download each week as a member at SwingScans. So very popular service, and you can get more information on the SwingScan sites. One thing that I started offering just this past week, there's more information at SwingScan, so I'm not going to go through the site. I'll leave that to you, but there is a 2-week trial now available, and it's only $27, and it's completely money back guaranteed at the SwingScans.com site. I've had less than a 1.2% refund rate lifetime in my business because people love my training, so thank you so much for your loyalty. I appreciate that. Unlike people who don't actually trade, I'm a real working trader, so with proof I actually really trade. So anyway, that's what separates me from all the educators out there, and also the professionalism and the success rate, the win rate of my alerts. So anyway, you can try that for $27, and I take all the risk. If you don't want to stay with it, you can even contact me and I'll give you $27 back. I'll still eat steak and lobster, so I don't care, but I haven't had anybody cancel out of this. So anyway, that's something that you may want to consider as a resource if you're a stock swing trader. And I put this together to be the kind of service that I'd want for family and friends and colleagues and industry colleagues too. For any of you who are out there in the trading industry and want to do some affiliate or joint venture work, you can contact me separately. But this is a really good platinum service, and the regular rate's only $97 a month, so it's a bargain. You can make just one decent trade and more than recoup it. So it's a really good bargain. Plus, the main thing is you get a half-hour plus with me every single weekend in depth, where we go step by step through some of the strongest charts. And if you take a look at some of the picks from last week, like United Airlines is really good. I said to go long in GoPro if it's able to take out new highs as well, and it just did hit today. So we'll see if it's able to continue running on up. But these are the kind of charts we look for, whether you've got an inverse head and shoulders that breaks out to the upside. I like classic horizontal breakouts with momentum candles. Previous resistance here becomes new support over there. My colleague Steve Nissen would call it change in polarity. And be sure to learn from Steve Nissen. I make so much money in my real money trades thanks to what I learned from Steve. What he teaches works, so that's good. Anyway, that's why I work with him. But anyway, the point is, look for the very strongest charts, and that's what I do for you guys. I manually scan through the market every Friday afternoon to find the very best in-trend continuation breakout charts for all of our SwingScans members from around the world, and really pleased to bring these types of very strong breakout charts to you ahead of the move, right? I told everyone this would be a good long on Saturday before the big run-up. Okay, so those are the type of charts you really want to focus on, at least as a professional trader. Qualcomm was also a nice big momentum runner, starting to slow down just a bit, but I told everyone about it back here on Saturday. So one of the things too that I do, I'm not doing it in this broadcast because I don't feel like getting all dressed up, but every single Saturday I do broadcast a live webcam feed, so it's a very personalized coaching type of experience. You can see me talk to you and kind of make eye contact, so to speak. I mean, I don't see you, but you can see me. And I do a live webcast with a live webcam so you can see me speak to you. So that's something else that's integrated into the videos, or into the webinar broadcast, I should say, so that you can see that. And then download the video and ask me questions. Hey, Ken, what about this? If you have any questions about the charts, or you want to get clarity on the alerts, or how to manage, for example, if a gap goes through an alert, how do you manage that? Because I always pick the very strongest. I handpick out the very strongest charts in the entire market that I can find for you. Charts like this, where even if you had traded 100 shares off 16, it's now up to 21, right? That'd be $500 in the money. Or if you'd taken the alert yesterday or today, nicely in the money alert, even if you got in late to the party. Okay, so those are the type of charts that I'm pleased to be able to bring all of the traders in SwingScans. One of the things that I encourage you to do is learn the setups and learn, what actually works in real money trades, and try and stay out of trouble. It's important to stay focused and stay the course on what really works, and to be able to work together as a team professionally, so we can see, where the best trades are. And you want to figure out what you're going to start doing differently tomorrow to make a difference in your own personal trades, and hopefully I can be a part of that. So those are the type of charts and what the service looks like. And the members area here for SwingScans, it's ideal for stock swing traders because it doesn't give you too many. This is the core list, the top 10 list of what to follow and where to trade it. I don't just, unlike others, I don't just spit out a list of tickers and say you're on your own. What I do is give you very specific guidance on the exact entries to use, as well as some trade management, how to use an initial stop, how to scale in. And one thing that we also add to the broadcast, by the way, is a position sizing add-on with a 90-day chart analysis. And the reason that we do that is we want to see, would we go large size or light size, heavy size or light size? Maybe large size trade might be 200 or 300 shares, maybe even 500 shares. A small size pilot trade, which is my approach I like to do, I might only do 20, 30, 40, 50 shares just to test the waters and see if that breakout's really going to hold and mature and take hold, and strategically, intelligently keep running on up for me. And then I can start getting the party started and add to the trade every couple of points, and position size, as my colleague Van Tharp would call it, or scale in or add to winning trades once they're in the money. So we do not only the top-down look at the 90-day chart, but we look at where the best trade setups are, and if we should go large versus light size, heavy size versus light size, based on the strength of the candles, the momentum, the slope of the line, a multitude of different factors. Okay, here's a quick candlestick quiz. I just saw one. What is this pattern? Name that pattern, folks. I also teach you how to use some of the different candle patterns. Again, for in-depth training, be sure to learn from my colleague Steve Nissen, or from our courses that we've done together. But I also, when I see something pop out that's just an obvious giveaway, that's a gimme, how much money could you have made had you properly recognized that candlestick pattern and traded it? Come on, folks, who can tell me? Okay, Pavna, Scott, you guys got it? Who else? Surely, with all the hundreds of you here tonight, there's, okay, Paul, right? Yeah, it's a bullish engulfing. So it's a bullish engulfing pattern. So we've got a downtrend here. It's not like at the very bottom, which would be a classic bullish engulfing, but I'm counting. I usually count the last week to qualify as a trend. So it's in a minor downtrend that had an engulfment here and then shot on up to new highs. Currently testing previous resistance. Actually, I use the 90 days, so that'd be around 61.70 or so. With a, what's the shooting star, right? Moves up, shooting star, sells off, comes down, bounces, keeps going down, bullish engulfing. That's a long trigger above the high of that candle, and booyah, 48 to 58, 10-point runner. Anyway, these are the type of charts that I like to focus your energy on in SwingScans to give you a really good insight in terms of the nuances of the daily candles, as well as the momentum triggers to use for actual swing trading. Once you see something that looks like a nice hot chart that's about to keep running on up, where do you get in? Where do you trail a stop? Where do you add to the winning trade? So whatever charts we're looking at, or something like Qualcomm, we also look not only at the 15-day, but at the 90-day chart. By the way, any trade that's a bounce chart, by definition, is kind of in the penalty box in the doghouse, and I make that a light share trade, right? If it's up at a 90-day high, on the other hand, if it's a good 90-day high breakout, like say Barrick is, I'm currently long Barrick in my Fidelity account, so I don't just talk about these things. I often trade many of them. I'm currently long Barrick as a gold miner play. I used to trade GDX all the time, was my favorite, but lately I like some others. Nugget and ABX are my two favorites, and I'm currently long Barrick. This would be a heavy share size trade up at new highs there because a nice 45-degree angle breakout. Which reminds me, I know my colleague Harry Boxer, great breakout trader. He's another guy I highly recommend at thetechtrader.com. And Price Headley's great too. Learn from the best people like those folks and myself. Peter Bain for Forex, Steve Nissen for candles, Tony Turner for ETFs, Van Tharp for position sizing. And a lot of them, like myself, have multiple disciplines that we're knowledgeable in. But go deep with a handful of the very best cherry-picked people that know what we're talking about. They can actually be part of the solution and not part of the problem. You have a good intelligent focus that works out most of the time. Your goal as a trader is to make as much money as you can. My goal as your facilitator and as a coach is to get you there sooner rather than later, and with as few speed bumps along the way, right? I'm completely dedicated to your trading success. That's what I've been doing for 16 years of my life after being a corporate training consultant and working with a lot of Fortune 500s and getting tired of the corporate politics. The cartoon series Dilbert is spot on accurate and brilliant by Scott Adams, and that's the reasons why I'm not a consultant anymore. I get tired of the company politics. I don't know if you've ever worked for a boss who's a total control freak, or worked with coworkers who are complete freaking morons, or customers from hell, or whatever the situation is. I like trading because I like to focus on the money, okay? Just like the fella Kevin says in Shark Tank, I look at my money like soldiers, and I put my capital out there work, and I want to see it capture prisoners of war. I want to see more of them come back, not just lose them out there on the battlefield. And trading is very much a battle if you're not doing it the right way. If it feels like it's painful and costing you money, like a lot of things in life, you're probably doing it the wrong way. So all you need is some fine-tuning and some help, and hopefully I can become part of that as you work with me. SwingScans, give it a shot. It's only 27, and I take all the risk. If you don't like it, tell me. I'll give you your money back. You've got hundreds of people, and it's a great way to learn the very best swing trading. It's like getting a kind of a half-hour vitamin boost or a shot in the arm each Saturday with the very strongest charts to get you started, along with the exact entry prices to use and the training that goes along with it. So that's SwingScans. And okay, yeah, the trial link is here. Thanks, Debbie. Let's see, it's right. Thanks for the reminder. It's at SwingScans. And that's new. I just started this last week, so it's brand new, doing a trial. And there's a video of a guy telling you a little bit about it, but I told you more about it. And it's every Saturday, 10:30 to 11 Eastern. And if you live in a different part of the world, I know I have so many international traders, so many of you from different countries over in Europe and Asia, South America, and all over the place. If that's not a convenient time for you, I've got your back because I record the entire event each week for you, and you can download it at your leisure, anytime you want. I keep them up on the server for at least a week or two so you can get time to download it and watch it, and you get to keep it forever on your hard drive. So it's not some streaming. I don't know about y'all, but I don't like streaming video websites because you don't know if the website's going to be around forever. I mean, I've been around 16 years. I'm not going anywhere, but you see a lot of these trading sites out there, and all they do is they stream the video, but where do I keep it? How can I save it on my hard drive? And I'd rather you keep it on your hard drive. Also, from bandwidth standpoint, I got so many hundreds of folks, I don't want to slow down the server, so you can just save link as and save that video in high resolution and keep it. And it's a really good, kind of like a half-hour swing trading stock seminar every single weekend that you get, and it's only $97 a month, so it's only $25 for a half-hour webinar, which is a great deal because I'm a top industry expert, right? I'm in stocks and commodities, money show speaker. I got the street creds, plus I prove I actually really trade, which almost no one else in the entire industry does. So that's one thing that I think makes for an irresistible offer, and hundreds have agreed with me. So glad to welcome you on board if you're not yet a member. Okay. Now let's take a look. Let's shift gears now. I want you to, figure out, change anything that you want to change when it comes to your trading. You've got the power and the know-how and the savvy, or you're getting there. And I want you to take control of your trading this year, right? Make this one of your better trading years by stop taking big stops in those charts you shouldn't be trading because they're dangerous, and instead get in on good, strong rockstar breakout charts that are likely to keep running for you. And I hope that I can be part of your success, as I have so many thousands of other traders over the last 16 years. I don't look at speculative, $2 and $3 penny stocks, and I don't do risky instruments. I like instruments that have a good, strong, solid, kind of like a work ethic, right? Like I have. I work harder than anyone I know in the industry. And that's true. I run over 77 sites, and one of the reasons I'm able to accomplish that is we've got so many new subscribers and such good revenue growth. The business has been going double-digit sales growth year over year, so we're able to add new resources for all of you and invest in faster web servers and more in-depth bonuses and the rest of it. So anyway, that's something that I'd encourage you to start taking charge of in your trading, is making a little bit different approach to what you're doing as a trader and start making money with it. Let me give you a quick trade management tip. It's much smarter to make 800 bucks kind of the hard way with a dozen trades, of which most are only 50 bucks or $70. And again, this is after commission. This is my realized P&L with $1 commissions and Interactive Brokers. That's why they're the #1 discount broker. Anyway, I like IB. $850 net profit with, what is that, 3, 6, 9, 12, 14 total trades, 13 in the money, 1 stop. Biggest winning trade was only 200 bucks, right? Most of them were only $40, $50, but it all adds up. Just like, the feeling at the end of the week in your wallet, and you had 120 bucks in there Monday, and now there's only 26 bucks left. What happened to it? Well, those lunches you ate, and the gas you put in the car, and stopping by the market to get some groceries, and stopping by fast food for something, and now you're down. As a trader, you want to flip that and go to the upside and start accruing money in your trading account. And as you look at your capital accounts, look at making, decent trades that aren't huge, but they all add up, right? It all feeds the kitty. And as a trader, it's my goal, my mission is to help you make more winning trades more often. And I'm a proven real trader, so I think that's one thing that I can bring to the party. Now, I don't swing, usually I don't swing 1,000 share trades and huge trades. It may be up to a few hundred trades, a few hundred shares, but make sure that I've done as many as a few hundred trades, but make sure that you try and keep things relatively focused and successful and low cost as possible. Okay, and that's what I do in SwingScans. So I give you the specific entry triggers, not just alerts, or not just symbols. What's more important than this is this column is where are the entries that make sense to get in on, and how do you manage the trade once you get in. And we cover trailing and initial stop values as well. Let me know if any questions on the SwingScans service. I wanted to give you a quick heads up on how that works and give you a completely risk-free trial offer. I ask that we limit that to 1 person per year. We don't want these people that join in a trial and then they quit, and then 3 weeks later, I want to try it again, and then they quit, and then 3 weeks later, I want to try it. No, don't do that. We don't play that. You can limit 1 trial per person per year, and certainly welcome you aboard, because we got so many traders from around the world that find this a valuable service. I think it can help you in your trades. I honestly do. This is my best swing trading stock offering, and it's $77 a month. It's over 2 hours of training worth of webinars, so that's a real deal from an hourly standpoint, as well as the performance of the alerts. You're welcome to audit the performance. This is my alerts from last Saturday, and see how much money you could have made had you taken those, and follow up with those in the week ahead, and you'll see, oh yeah, he's right. So anyway, go ahead and join SwingScans. It'd be great to see you all here. One of the things that I think can also help is look at a market plan, a specific market trading plan that helps you map out visually how you're going to trade and what kind of trading setups make sense. One of the ways that you want to do that is with a flow chart that maps out visually major steps in your trades. As somebody used to be a quality management consultant, I'd use flow charts with senior management and then trickle it on down to middle management and deploy that in an organization to map out pain points in the company. What's causing you problem? Maybe it's bad communications with another department, or maybe it's late to market, maybe concept to customer build out engineering is taking too long to get to production. How do we streamline the process in a sensible way, gradually over time, that makes sense and helps us get better efficiencies in companies? As a trader, I developed the first flow chart over 14 years ago, and here's a second one. That one was for day trading. This is for swing and intraday trades, and it helps you identify step by step some of the things that you really want to start doing differently in your trades. And I encourage you to use this with SwingScans and use that with Trading the Open. Whichever of the two, or if you decide to go with both, it's your choice. Choose one or the other at least. And if you've got time, do both. But use it in concert with. And all of you are current members, all of my SwingScans and Trading the Open members, think about applying this to what you're learning in the live room each day. What are some of the things that can really help you focus in? Because you have to stay focused and really stay the course on what actually works and take action on making small, incremental, consistent improvements in your profitability as a trader. And the way that I do that is to decide, for example, many of you probably just use kind of wing it or have the same share size. Like when I buy something, I always buy 100 shares and that's it. Or no, professional traders, if you look at any of my institutional clients and talk to those guys, whether they're Wall Street, the market makers or specialists or hedge fund guys or prop traders that come to my seminars or whatever, they are all talking about the financials like a good venture capitalist, if you've ever seen the TV series Shark Tank or The Profit, both outstanding and highly recommended. Those guys are always, and ladies, are always looking at the numbers and does it make sense? And as a trader, if you're just blindly entering all your trades with the same share size, you're going to get killed. You need to use large versus small size. A pilot trade is what I call it. You may want to look at this. Here's like from 10 years ago, and I trade that way to trade the same exact way today. Here's an interview I did with Tim Berkman back at Mandalay Bay. I think it was 2008 or 2007, trading with pilot trades and determining a position size that makes sense, that's a little more variable and a little more dynamic. It still keeps it easy. Don't make it difficult. Just do you do a lot of trade, do a lot of shares, or just a few shares, and make that a function of the strength of the chart. The stronger the chart, the more aggressive you want to trade it. Very good common sense, but how many of you do it? And another thing to pay attention to is you need to manage your open positions using unrealized P&L. So once you're in the money, if I'm in the money, say one of my trades, and I'm up, say, $229 or whatever, let's look at it, just randomly look at it. That was a bad day, only $18 down. That's what you want a bad day to look like, by the way. Maybe I did 10 trades and it only cost me $18 to play ball. So yeah, I screwed up that day. I admit it. I had more stops than wins and I lost. But look how tiny it lost. It's lunch. Look how much you lose on a single trade. If you have to add zeros or add decimal points, something's horribly, awfully wrong. So, if you're trading for money and you're trading for capital, yeah, you take your shots. And when you have a down day, it should look small down like this. It shouldn't be a big, horrible $600 down day, right? So you're playing kind of scratch ball with the market where you got these up and down days, 50, 100 bucks up, 50 or 100 bucks down. And when you have a good, decent winning trade day, even if it's a lot of little trades that add up, you can still make a few hundred. So, that's the type of granularity with which an intelligent trader attacks the markets. It's a much finer comb, a finer tooth comb that you go after your trades with. And, at least that's how I do it. My biggest winning trade days are always a sequence of small positions that then I scale into or out of dynamically. I scale into the winners, I scale out of the losers, then I close the final trade, and then I go back and figure out where did I screw up and what did I get it right, and how can I start doing more of the things that make me money in my own capital trading account. So anyway, I encourage you to look at, here's that link. Thanks, William, asking for a link to the forum. It's instructive to look at that. If you look back at this is my earlier forum that I did, and we got 85,000 views. People like seeing real money trades. Even on a modest trading account, I did 16 grand net profit on I think it was like a $40,000 account or whatnot. So anyway, that was a few years back. But anyway, it's not shooting for the sky, and I'm not here saying you too can make millions trading, because that's a bunch of hogwash. What I want you to do is get to, and most of you, I'm sure you'd raise your hands, as everyone does at the Money Show Expos and my live seminars in New York, Denver, Las Vegas, California, wherever I've done, Dallas, wherever I've done live seminars, most people would be happy to make just a couple $100s a day. And the potential is there, but you got to stop swinging for the fences and over trading large size. And that's where SwingScans comes in to the rescue. Bum, 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 bum. I can give you my best shots at the very best charts that are very carefully thought out. I put a lot of work into figuring out what's most likely to run, and you can see the performance of the alerts from this last week is proof, right? This is the members area. This is the actual members area I'm logged into, and this is what all of my SwingScans members get each week. So, and they get the video download in case they can't make it, because everybody, well, I won't say everybody, but I got a couple hundred requests of people asking for the download video. Ken, please do the download video, and people wouldn't join unless I did the download video. So I'm adding download video, and I've been doing that for quite a few months now. And that's a resource for you as a SwingScans member, along with the specific tickers and where to trade them. And again, I got to say, for compliance reasons, it's for paper trading educational use only. But you know, you do what you got to do. But anyway, I give you my best shots each week. It's my pick list. I'm a veteran trader. I know how this works, and I have a survey and all kinds of stuff to help out in terms of a help area. But that's the main resource for SwingScans. Okay, now for you wild and woolly day traders, let us shift gears to our intraday trading setup. And I still use the eSignal 10.6 build because I like it. It's what I've been using for 15 years. So highly recommend eSignal. It's the best charting software in the entire known universe. I've done millions of dollars worth of trades using eSignal. So that's why I'm a big proponent of eSignal, because it works for me. So here's, for example, my actual alerts today for trading the open. And here were the alerts for yesterday, just so you can see I'm not a one-trick pony. Here is coming up soon, TikTok. At some point they'll show up. Okay, oh, they did. Okay, there we go. Here was from March 1st. Performance of my alerts. Here was, there's March 3rd, there's March 2nd. Okay, so I'm going to put these in chronological order for you. This was today's alerts, right? This was yesterday's alerts, and this was Tuesday's alerts. Now, because I want to win, I only trade and teach how to day trade the markets on Tuesday, Wednesday, Thursday mornings, which is great news for all of you who have a life and are busy and don't want to be glued to the monitors all freaking day, because most of your best trade setups are going to be opening 1 hour range breakouts Tuesday, Wednesday, Thursdays, and that's why I run the room that time. I would not have, and this is the actual performance of my alerts. All the green highlighted, these are all, most of these are posted before the market opens. I update them in real time dynamically during the market. The ones that are highlighted in green were successful breakouts or breakdowns. Red are shorts, greens are longs. Red means I had a stop loss. So I had 3 stops this week and a handful of break-even trades, which are the gray highlights. The rest, all winners. Booyah. And that's proof. If you've ever been in my live room, you know how well it works. That's why I've been running it for nearly 16 years now. And we've had several thousand people as members over the years, because I'm good at, I should be good. I've been doing this nearly 20 years. So anyway, those are the type of instruments that we like to focus on. We have the EMini calls, we have stock breakouts, we have stock gaps, we have inside charts, swing trading alerts, ETFs, and we also throw in Forex for good mix. And this is a breakout alerts box. It's parked here on the rightmost side of the trade workstation for us. You know, as the markets are moving and things are running and all that, I update the alerts for my traders dynamically so we can see how to get in, how to get out, and where the best trade setups are. Let's take a look at a couple of examples from today, just to give you a feel for the type of alerts that we get here. I did have a stop in UVXY and a bounce, but we made lemonade out of lemons by going short twice and nailed it on the way down. Nugget, we went long at 56.60. The long call was right here. The next long was up at 57.30. You know what's neat is I post these before the market opened. So back when it was down here, I said go long if it gets over here, and go long again if it gets over there. Then I walk traders step by step through the entry and exit dynamics. So a really good classic stock day trading. You may have seen all my articles in Stocks and Commodities and Active Trader and my Money Show presentations. I'm a big proponent of, if you want to avoid false breakouts, stop trading things that are inside the previous day's chart range. Instead, focus most of your energy on minor gap continuations, which are the best, or at least 2-day high breakouts. By 2 days, I mean today and yesterday, which is why I have a fixed 2-day chart. One reason I don't use any other charting software is because I like seeing a fixed 2-day chart, unlike the advanced chart that dynamically updates or whatever. I prefer seeing my data in front of me and it unfolds live dynamically with the tape running, and we teach traders how to use tape reading. I'm the original tape reading. Well, maybe Jesse Livermore is the original tape reader, but I'm the one who started teaching people how to do that even back in a tape reading seminar in the year 2001. And you may have seen my industry articles on the tail of the tape and active trader and whatnot. Anyway, we use tape reading and the 1-minute candlestick charts for breakout calls. Okay. Another good chart today, Apache. I said long at 42.30 if it hits. And I said it when it was down here. It did hit and run for us. I also said long at 42.40. So we had kind of two chances to get in. If you didn't get the 30, you could get in at 42.40. Either way, ka-ching, you're in the money. Twitter was another good example of a winning breakout call that my live Trading the Open room members got today. When it was down here, I said, look for a bullish cut breakout. 1880 is the first long because it's right above the previous day's high. And the second long is up at 1910. And I had him sell it right at 1930. So we didn't get the exact top, but we got close. We got in here, we got in there, and we sold there. That's classic stock day trading. Okay. Now, who can tell me why EMinis would be a completely stupid instrument to day trade most of the time? It seems like the trading industry is infested with a lot of these internet marketer wannabes who aren't nearly as good as I am, so they don't dare compete with me on stock calls. So instead they try and scavenge and say, trade the EMini Futures because you too can make a fortune. I call BS because we have expanding range breakouts, ERBs. That's every trader's worst nightmare because you try and go short at a low, you get stopped out on a pivot. You try and go long on a horizontal high breakout, you get stopped out on a retracement. Okay, let's go short again. Oop, that didn't work out. You get stopped out again. Oh, go long. Okay, so it just drives up a freaking wall. ERBs are the plague of EMini stock or EMini futures day traders. Stock day trading is a lot easier. I mean, you tell me, what would be easier to trade? The EMinis, crappy chart, horrible chart, like going on a date with a gold digger. Been there, done that. Doesn't end well. Although it may glitter on the surface, when you dig underneath, you see, oh, skeletons in the closet. Warning, Will Rogers, stay away. Just say no. Instead, pa-ching, Nugget, nailed it, baby. Twitter, another big winner for us. GoPro, I called the long pre-market at 1350, got them out at 1380. So we got 30 cents out of it. We didn't get the exact bottom. We didn't get the exact top. We got a nice, healthy 30-cent ride on the way up. That's classic stock day trading. That's what you want to do as a trader, you know. Even if you can't afford to trade, say, 1,000 shares of Nugget, which I wouldn't do anyway, you could at least swing 10 shares or 20 or 30 shares and still come out doing very well. I had you taking my alerts starting at 56.60 this morning, right? I mean, so just kind of do the math. EMini room operators are hating me saying this, but I'm even going to do a series of videos called the evil EMini, the awful EMini. The only time you should trade the EMini futures, like any index tight instrument, is at a gap or a out day. On the street, we call it out days versus in days. An out day is, for example, your S&P is, come on, S&P chart. Where are you? S&P. Usually I've got the SPX here. Anyway, when it's above the previous day's high or below the previous day's low in trend. Otherwise, you're just going to get yourself clobbered silly trying to trade the choppy up and down nature of these charts, right? Because they're choppy. Can somebody please help me explain? I asked another educator at an event who specialized in EMini trading. Apparently there's a bunch of them out there. They're like fleas. They're like roaches. And to step on them like the cockroaches they are, for that reason, I'm out. But Wall Street sharks, baby, because can somebody explain to me, I mean, just humor me, why in the world would you trade an instrument that has the characteristics of, like my colleague Peter Bain from Forex would say, a kangaroo jumping on speed, going up and down sideways, never which way but loose? Why in the world would you trade a stupid instrument like this when you could trade a Schwang instrument like that, or something like that, or even something like this? Much easier to trade a good strong breakout than getting stopped out. Of course, the EMini live room operators will not reveal that to you because they're trying to sucker you guys. But I'm a trader's advocate. That's my USP, is advocate for traders and call it like it is and prove that what actually works. And you know, you can see the performance. So this is today's alerts. I mean, this is what I called for today. I said Apache long if it gets over 42.30. How much money could you have made had you taken that alert this morning? Or even if you're a little bit late and you're tardy and you procrastinated, no harm, no foul, you got in at 42.40. Okay, well, hey, still ran up a couple of points. That's kind of a lot easier than EMinis. Yeah, Vin saying it's bipolar. Yeah, good example. Bipolar, like a pinball. Now, I like pinball. I've got a Xenon pinball down in the basement and a Chislo machines, and I got a whole bank of pinballs. I got a 4,000 square foot McMansion. I live the life. I go to Bellagio to party and, you know, that kind of stuff. But I don't want to trade something that's like my pinball machine because, you know, shiny steel balls is one thing, but my money's something else. So if it's bouncing up and down, I don't want to trade that instrument. Just look at the proof is in the pudding. I mean, you know. So I hope that I'm giving you some food for thought of why you should not be day trading the EMini futures, because for the most part, I mean, you can trade them. I teach how to trade them with micro cup breakouts at 2-day highs and 2-day lows, but the other 90% of the market days, you really want to focus your energy on instruments that actually have a shot of running. So that's what I teach traders in Trading the Open. I'm a specialist in stock day trading. I'm the world's premier expert in intraday stock day, or one of the top guys in intraday stock day trading. Compare my calls to anybody, right? Where was yesterday? Was that Tuesday or Wednesday? We got to move this over to see. That was the 1st of March. Let's look at the 2nd of March. I did have a stop in First Solar. I'm very honest about everything, right? I'm very candid about, hey, if I had to stop, I had to stop. It is what it is. But unlike other rooms, I don't have like 40% stops. That would just be horrible. Why in the world should anybody, that's why nobody competes with me in this market space. That's why we're the industry leader, because the performance of the alerts. Where is that puppy? Let's keep that on top. So on this day in Acadia, the pharmaceuticals and solars have been hot lately, right? So as has oil. So Acadia, pre-market, I said to go long if it got over 1940, right? Which is right there. So when it was here, starting its day off, I said, guys, go long if we, and ladies, go long if we get over 1940. Second long triggers up at 1980, right? And I got us out early. I think it was around 20.6. I didn't wait for it to go all the way to the top, but we still got a good point run out of that puppy, right? That's good performance, right? Kite, another pharmaceutical sector instrument. KITE, go fly a kite. That one 52.6. We got the tail end of the breakout in that. Seagate also trading hard on its hard drive breakout 33.6. We got the tail end of that on the breakout. So we like to look for these very strongest charts, and what I do in Trading the Open is teach you specific strategies designed to help you make good winning trades more often in instruments that are actually likely to run. Yeah, I will tell you the truth about trading is, number one, if you're taking a lot of stops, stop trading anything that's inside the previous day's range. That's the number one fix for stops. You're going to get choppy charts that don't work out. They're what I call inside charts. And in 16 years, I found I'm running the room with tens of thousands of alerts. The biggest stop, occasional stops that I get are on the inside chart. So I learned the hard way, as usual, avoid inside charts and specialize on out charts that are outside the previous day's high-low range, right? Those have a, because institutional buying volume comes in. Those OHLC, algorithmic, dark pool, liquidity trap, program trading, algos are all triggered using derivatives of OHLC-based data sets, open, high, low, close. I know, I have institutional clients. I get the inside scoop on this stuff, gang. I know how things actually work. So what you want to do as a trader is only trade out instruments and out days. That's especially particularly true for things like the risky EMinis. So if you're getting killed trading the EMinis, maybe you only get one day like this a week, or you know, the EMinis will only do that one day out of the week. The other days, you want to not only trade those for your contracts, but trade these better charts that have superior price action instead, right? So in Trading the Open, we teach traders how to do that and how to look for these. And this is today's actual live. Now, you'll notice that maybe most of the alerts didn't hit, which is fine. I'm fine if we keep you guys clear out of trouble and get in on the ones that actually do hit. And we have the watch list updated for you each day as well. To me, was a big gap. Keep that on the radar for the upcoming weeks ahead too. We had the short breakdown, then it kind of went sideways. Carnival Cruise Lines went cruising into an iceberg. Looks like it recovered my long call. Okay, that worked out if anyone took that. I'm just looking at this now. 47.20 was my long call, so that worked out if anyone took that. And what I do is I highlight it and change the color to indicate live in real time, not after the fact like now, but real time. if it's in the money and running. So I said to go long Carnival 47.20, do the math. You know, it ran up 60, 70, 80 cents, so that's good. And what we like to do for our traders at Trading the Open is also teach you things like not only open range breakout strategies, but more professional things like looking at the price extensions on if it runs so far on the open, high, low, it's likely to run that far today before it pulls back or stops, and how to use price projected trigger points to determine the maturity of the trade and profit potential, and get you in and out safely. Okay, and that's what I'm good at. So, you know, compare my performance to anybody in the whole industry, please. I completely believe I'm the best in class. That's why most of the competitors are now trying to carve out market niches in the choppy. Ooh, it ran all of 0.03% today, Sparky. Why would we trade the E-minis that go chop city when you have better things like even Twitter for a cheap chart? It ran up, you know, and I got traders in correctly long today on its breakout. Notice, please, open range breakout length today. By the way, open range breakout was developed by Tony Crable for the commodities industry, not these Johnny-come-lately wannabe educators. There's always an originator and then the copycat. So credit where credit's due. The concept of ORBs goes to Tony Crable, C-R-A-B-E-L, and I believe there's historical articles over at the traders.com, the stocks and commodities website for members who can look at those. But anyway, I like to and that's for commodities. So I like to trade open range moves for 2-day highs in our equities and ETFs, right? So I know a handful of you had mentioned you day trade ETFs as well. Nugget was a good example of the type that I like to focus on. I like the Nugget and I like UVXY are my two current favorites. We tried to do a bounce long there. We got stopped out. We made up for it, though, in spades with the correct short call at 31.50 and again at 31.30, just around 20 cents under the inside there. So we called the shorts there, and it worked out, ran, you know, almost 2 points. So whether you intraday swing it and hold it into the close, or you do like I like doing quick 15 or 20 minute trades, made for really good breakdown plays in UVXY. For the up chart, we like Nugget, and we nailed it on the breakout there. So that, my friends, is a quick introduction to, I haven't nailed Nugget call back on February 7th. I was calling that long, right? And I'm currently long ABX myself, Barrick, which is another one of the gold miners. But anyway, Trading the Open, been running this thing proudly for nearly 16 years, celebrating our 16th year, longer than almost anyone in the trading industry, for good reason. And you can see the testimonials from traders. You can see how to do a trial. Here's that, by the way, before I forget, here's the members area. There's a lot more up here with additional resources, but tonight I just wanted to show you an example of some of the archived videos. Again, in high resolution. They're not, see, some of these shenanigan internet marketer people that run rooms only give you access to streaming videos because they don't want you to ever leave. So they try and keep you bottled into a subscription by only having streaming video available. That's a bad, unethical thing. I freely give you guys complete high resolution 1920 by 1080 Blu-ray quality downloadable WMVs that you keep forever. So you can develop an entire library of these. And I do record at least the first, half hour, 45 minutes for everybody. Usually at least 45 minutes from 9:15 to 10 o'clock of the live room. And I do that for the current week and the previous week. So our current live room members can log in and download those videos. We have monthly bonus webinars as well, and also some weekly cash charts for swing trades that I also post each week. I was heavy in the airlines this past week, so I told all my members this week to go long Hawaiian, United, GoPro, American, Delta. Every single one is up. Cha-ching! So anyway, I hope that I've earned your trust. And even if I haven't, give it a shot, and, risk is on me because I've got a money-back trial, and it's only, $47 for 2 whole weeks. I do ask that we limit those to 1 per year because I don't want the administrative hassle of people trying it every other month or something like that. So, blank or get off the pot and take action. And as you look at some of the and I completely satisfy, complete satisfaction guarantee on the trial, so you can try it out on my dime and see what you think. And that's you get 15 hours of live training with me every single month. We get lots of bonuses and extras. You can see I've got the credentials. You can see an example session here from a few days ago, right, on February 3rd, and a couple of overview videos that give you a quick heads up on what it's all about. So that's Trading Open live room trial. This is really good for both stock, mainly for stock swing and day traders, though I also do cover the E-minis. My E-mini triggers are so good, I post them at places that are relatively conservative. So we don't try and scalp out like 4 ticks or something. Only morons trade like that. Really, because you're going to get stopped out and lose all your money. And they try and cover up the fact that they're inept. And if you actually audit their performance and ask them for Schedule D tax returns, you'll see they're full of crap, right? So most of the E-mini day trading rooms are complete BS, and you should be definitely wary of them. Ask for performance proof, ask for some proof elements, ask for video testimonials from the members like I show and the rest of it, and you won't get it. So I like to set the bar higher for the industry. As well as being a high credential professional, I'm not just the president, I actually prove I can trade. So that's one thing that I think can really help. Does everybody see the fallacy, the inherent fallacy? And you guys should have known this on your own, but let's go for 3 ticks. And let's do 400 contracts and lose hundreds of thousands of dollars if it goes against us and we keep stubbornly slamming into the trade and hope to pull it out of the fire. No, Sparky. Professionals, we want to trade something that goes like this, something that goes like that, something goes like that. All right? So that's what we want to do. Trade the strongest directional breakouts or pivots, as the case may be, and look for these best high velocity charts that are actually likely to make money for you. And avoid the choppy EMini Futures and the choppy penny stocks that have no volume and no borrows anyway and all that kind of foolishness that you see these various internet people are 99% marketer and 1% trader trying to hawk to you guys. Be a little more cautious about who you learn from and how you learn and what can actually make you money versus smoke and mirrors that other people have. Okay, so anyway, I hope that I've given you a good overview of what the live room and SwingScans is all about, and I hope to see you try it out at some point in the future. You don't, I'll still eat steak and lobster, but I'd like to see all there because I like to develop a community of active traders that are actually single-mindedly focused on extracting profits out of the markets on your terms and do it in an intelligent, strategic, very step-by-step manner that makes sense, right? Just like if you're one of the venture capitalists on a show like Shark Tank or The Profit, do the numbers make sense? What's the year-over-year sales growth? Is it unique? Is it something that works? Is it something that has big upside, big potential to do well? And then what's the track record for things like alert services? Are they able to actually produce more wins than stops? And do they get you on the exit side, which is one thing I'm particularly keen on, is getting you guys out at the first sign of trouble. Something runs up and we're long, I will tell you, trail a stop at 44.20, close out the rest of the trade so you lock in a win on the first piece of it. And even if you miss out the midday bounce up, we got the winning alert on the first big leg up. And that's what you want to focus your energy on as a trader, is figure out how to make money in these charts that actually run and stay clear of everything else. So and the sure thing, let's see, Scott's asking, can I share my scanning criteria? Well, yeah, absolutely. I cover that at length in my SwingScans for stock swing trades. And all this stuff is in videos on my YouTube channel. But the criteria, I like stocks priced between 20 and 70 a share, which you can see these all are, right? Or mostly all are. We had CN and Twitter on the low side, but most of these are in the $20 to $70 share range. Minimum 10% range on a 15-day chart. I mean, a $50 stock goes to 55 or better. And volume of at least 1 million shares a day. And then we teach the various patterns in SwingScan. So for stock swing trades, that's what we look for. For intraday trades, I like looking for instruments that have at least a 1 point, preferably 1.5 or 2 previous days trading range, that has a good clean breakout history behind it, so that it's really likely to power up and make money for us if we actually traded it. Though in the live room it's for paper trading only and demo use only, so it's a safe learning environment. But where you're trading it for live, you want things that are actually likely to make money for you. And the only way you can do that or get at that is trade charts that have nice multi-point runs on high volume and high volatility, nice 45-degree angle, high volume continuation breakout, right? Or if you do trade gaps, whether it's a gap fade on something that's extended or a gap continuation, I think we had a couple of gap fades. Today, Carnival did a gap down and bounce, and Toomey did a big gap up and a sell. So we had a couple of gap fades. And those alerts worked out as well. So those types of charts, or British Petroleum in the oil sector did a nice open range congestion bullish cup that then broke out to new highs, did a 1, 2, 3 pattern, moved up, regressed to the mean, a 50% retracement as I teach, and then resumed its trend to the upside. That one will be of interest moving forward next week as well. So when you look for strong instruments, one thing that we also cover at length is looking for the strongest sectors. So who are the hot sectors today? Gold was, right? The Philly gold and silver market was strong, and finance brought up second place, finance and banking. So they were buying gold, silver, and banking, and they were selling the biotechs. And being keenly aware of your sector relative strength, something I cover in the stock trading success system with my very long time colleague Steve Nissen. Over a dozen years we worked together. Very pleased to work with Steve, because what he teaches actually works most of the time too, just like me. And anyway, you have a whole DVD allocated to sector-based trading, and that's one thing that you get live dynamically at Trading the Open, is a really keen look at the sectors. We also look at market internals like the ARMS indices, also known as the trends. And I first learned how to use the trends from my colleague Tony Turner in her excellent book, Beginner's Guide to Day Trading Online, from the year 2000, I think it was, quite a long time ago. And the trends are also a good market internal, kind of a pressure point signal of buying or selling pressure. And we use that in conjunction with our winning alerts to get you guys in on the right charts the right way. So anyway, that's it. I just wanted to say thanks so much. If any questions, let me know. If not, tomorrow's another day. And I want you to learn the setups and learn what really works in real money trades, and to stay out of trouble. Ignorance is not bliss. Ignorance is poverty, or learning from the wrong people, like the stupid people that say day trade the EMinis because you too can go, long 30 contracts for 3 ticks, and then you get stopped out, and then you wonder why you're losing a fortune while the guy running a room seems to be gold. Well, it's because he's full of crap and they're con artists. So instead, learn from a guy who actually really trades, myself, with proof. I can actually have a decent year, and look for the difference between that and demand more, like 85,000 other people have, right? So I'm not a big money trader. That's I'm very candid. That's my biggest failing as a trader, is like when I play tournaments, Hold'em tournaments in Vegas, I'll play at the 1, 2, or the 2, 5 tables. I don't go in at the VIP 100, 200 tables, or do the World Series of Poker $10,000 buy-ins. I'm still kind of like small size. So I'm the guy you need to learn from. If you want to keep your stop, potentially keep your stops itty bitty, as tiny as possible, I think that makes a lot of sense. And thousands of traders have agreed. So if I have a bad day, a bad hair day for Ken, maybe 150 in the hole. It's not $1,550 in the hole, unlike other people that would have you trade the E-minis or overtrade penny stocks or crap like that. Instead, we want to focus on, if we're going to have a winning $800 day, how do we do it? A dozen trades making maybe 50, 60 bucks, a couple of decent wins, small stop along the way, stick a fork in it, it's done. And that's what I teach, how I do it, at least, at Trading the Open. So I hope that I've earned your trust and, at least the interest in trying it out. It's just 47 for a couple of weeks, and, give it a shot. What I would encourage you to do, by the way, too, before you even do the trial, is always look for free stuff, right? And just click on this and type in Trading the Open at my YouTube channel and look at recent videos. Like a couple of weeks ago on February 3rd. I was going to post one from this week, too. I've just been swamped, but this week's performance was stellar as usual. Anyway, you can go to my YouTube channel at Trading Television. Go ahead and subscribe. Join the other 1,200 people who are subscribers, and look at my Kin tag, which is kind of neat. I correctly called long coach in United. Pivot, if it happened in dust, it didn't happen, so we're not in that. Nugget long earlier, and the rest of it. And look at the Trading the Open live room videos there, like this one from a couple months back. And I've got many of them here to look at, and it gives you a good sense of what the room looks like and feels like. And then, try it out. You have my word. I give you my best, and I always answer questions honestly, correctly, specifically, with integrity, with authenticity, the exact types of patterns you need to learn. And I'm also very honest about telling you why stupid instruments like the E-minis would be a stupid instrument to trade. And it's not like I have a thing against the E-minis. I have a thing against losing money, because I love money. I love my money. I love my family, and I really love my money. Money is good. The more money, there's very few problems in life that money doesn't fix. So the more money we can have, the better. And so something like this, I eyeball the chart. I say, no way in hell. I'm going to lose money if I try and trade that puppy, because what am I going to do? Try and go short and then try and quickly cover it out before it bounces and maybe go for a bounce long and get stopped out. But no, I trade what I know works, like minor gap continuations at 2-day highs. Much easier, right? Or even Twitter on a nice open range breakout. Even if you didn't get the first leg, you got a second chance, and I got everyone in here. We're at 1880, so that was the first chance. That was the second chance, and you're off to the races. Get at least 40, 50 cents out of that puppy. So, you know, it all adds up, and that's how you trade. So anyway, I wanted to thank, on behalf of all of us here at Trade Mastery, and me, the original university site. I had all these people copy my university concept, but I came up with it first at Day Trading University. For proof, look at any Who Is registry and type in, you know, at Internet or whois.godaddy.com or any Who Is domain registrar, and you'll see that I was first to market. Everybody else copied me. But that's okay. They can copy, but they can't compete. So that's my catchphrase. Anyway, that's two different services in one, showing you both SwingScans and TradingTheOpen. And that'll do us for tonight. So anyway, thanks so much for being here. I hope that I can be part of your success moving forward. I will give you very in-depth, detailed, professional-grade training at a bargain, at a discount, and I'm the real deal, right? I actually really trade, and I teach you the difference between the charts that actually make sense to trade and everything else out there. So y'all have been amazing. I wanted to thank all of you for being here. I appreciate it.